So sale prices of homes have increased over the past few years. According to the National Association of Realtors, prices rose year over year in the third quarter of 2022. But with the sale of your home, you may have to pay more taxes. So here are some ways to reduce your tax bill if you sell your home. Joining us live in studio, CPA Kimberly Washington, also known as Kim Sense, to a lot of people with some great advice. First thing, what is the number one thing people have to know if they want to sell their home when it comes to taxes?
Definitely talk to someone before you sell your home, of course, a tax professional, but you want to understand the process and how it will impact your taxes. First things first is, of course, understand your cost basis, the amount that you paid for your home, any improvements that you made. The second thing, get an idea exactly how much you can sell your home for, of course, at what price point. Determine whether or not if you'll qualify for any tax breaks. And of course, the last thing, of course, you want to make sure that you determine what tax strategy should you choose so you can lower your tax bill, of course, when you sell your home.
All right, everybody loves to hear the term tax breaks. So what are the tax breaks that are available?
Right, that's a big one. It's called the tax gain exclusion. And of course, it depends on how long you stood in your home and a couple of different other factors. But if you're married, filing joint, you can actually exclude $500,000 of profit. So that's a big deal, of course. And if you are single, the amount is $250,000. Generally, you would need to stay in your home 2 out of the 5 years in order to qualify. There are some exceptions to the rule, so you definitely want to speak with someone as it relates to your taxes.
So what should those people watching this who aren't eligible for that exclusion know?
There's some other tax breaks that you can take, or just make sure that you understand. Of course, it's called capital gain tax rates, which are lower tax rates than your ordinary income tax rate. So in order to qualify, you do have to hold a home, of course, more than 1 year. So the rates are from 0%, 15%, and 20%. You can also qualify if you had your home or investment, of course, property for more than 1 year, but you definitely want to document all of your costs, your improvements that you made into the property so that you can qualify for these different tax breaks.
All right, everybody needs documentation. What documentation is necessary to claim your gain or loss on your tax break?
Document, document, document. Of course, if you have a home, you may be living in it for a long amount of time. And of course, as throughout the year, you may have different improvements that you would make. You want to document and keep those documents handy so that when it's time to sell your home, you can have that information. You also want to keep a record of your HUD statement or 1099 statements received. You would need to report it on a Schedule D of your tax return. Of course, you're going to complete what's called the Form 8949, but definitely make sure that you talk to a tax professional before you sell your home.
Yeah, a lot of homes on the market right now all across Metro New Orleans.
Yes.
All right, as always, Kim, great advice.
Thank you so much.